What's good, family? Welcome back to the channel. It's your boy D, and this is D's Daily DD, where I bring you the facts so you can clap back to all you players, traders, and haters. All right. But first off, I want to start off by saying I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. So today, guys, I feel like I struck gold with this information. This is going to be a part two to the information I have been talking about with kind of like what happens with the short sellers, what happens with your, the retail investors, and when you hit that buy button, what happens as far as like, what happens with your account, where the order goes, how it's processed and settled. And it's very complicated, and that's how people get lost. And we try to think of the stock market now like a simple thing, like, oh yeah, it, like if it's in real time. But what we have to realize is that it's not in real time. When just because you press buy on your app, it doesn't mean that you have the share right away. There's something called T+2, which I have talked about in the past. And remember, like with this document, it has a lot of information, and I had to process it over and over and over and take notes and with the whiteboard. And that's why I want to share it with y'all, because that is one of the main goals of this channel, is to help educate people and help them understand and to clear the FUD, because I like to bring the receipts, I like to bring the facts. And I think this two-part video has a lot of good information in it. And yeah, I'm excited to talk about it, even though I know the charts, AMC and APE had a pretty red day, but so did the rest of the market. And it had a lot to do again, and it had to do with the bad news that keeps coming out about the economy, possible recession, the interest rates. All that plays a part because AMC and APE are part of the stock market. They're part of the game. It goes on, so they somewhat have to follow the rules and so on. And a lot of this stuff is my opinion, guys, right? I'm going to give you the facts, but then I also give you my opinions on top of it, and my thoughts and how I see it, and why I expect a squeeze to happen. I wouldn't be here if I didn't think a squeeze was possible. And now that I have learned what the mechanics are and what goes on in the background, I feel more confident, and I'm not like so worried about the daily chart and the technical analysis, even though I do like technical analysis and I try to learn about that too. But yeah, let's, if you haven't already, I'm going to jump into the information, but if you haven't already, hit that subscribe button. I'm going to hopefully, entertain you, teach you something. So join the family. We are growing the channel, and I'm seeing progress in that, and it's awesome to see. But that's what motivates me to come back and to bring this information to y'all and to do my best to break it down, right? Because I'm not an expert, but I just like to analyze and read and then, go through the thought process. So let's jump into the info, guys. I think you're really gonna like this. All right, so I have this is the new information from today, and the part one yesterday I was going over, how the SEC is set up with the DTCC, the DTC, and the NSCC, and how we are against, the apes. We're pretty much against the hedgies, the brokers, and the institutions, because they all can make deals and work together and swaps. And there's just, like I said, it's very complicated. It's not an easy thing. And when we think of the market, right, the retail people, we want to think of a fair market. And in my opinion, right now, it's not really looking like a fair market. And also because it's not in real time. There's delays and there's processes, and they have these, rules and regulations set up to go a certain way, that just because, like I said, like because you just buy that share, right, it doesn't mean that you have it right away. It has to be settled within 2 days, right? That's what the data states. But yeah, I went over what naked short selling is and what traditional short selling is, because there is both. And then what tends to cause the FTDs, with the information that we got yesterday with the APE that had 43 million FTDs in one day, which sounds absurd to me. So let's start with this. What you have to remember, right, is that the shorts have multiple avenues to get the shares. And then even when they can't find them, right, in my opinion, I think they do naked short sell. I think we have evidence of that now, especially being involved with AMC and APE and all that has happened. I believe that there is a lot of naked shorting that happens. So you look at the stock borrow program. That's what I'm going to talk about today. Sorry, they can also go to institutions, or they can go to brokers if they're trying to find shares to borrow. So it's not like they only have like one place to go. They have multiple avenues. That's what you always have to remember. and that's why you see the fluctuation of the shares. All right, and even though we the apes have said we bought the float over and over, there's still something that exists that is called the stock borrow program, and let me give you some details on that. So the NSCC has this mechanism to reduce the FTRs, which are failure to receives. They're different from FTDs, but it's a mechanism to reduce FTRs, which are basically IOUs, which I think I have IOUs of APE in my account right now. It's not, I can't prove it, but I think I do because I bought on those days when there was FTDs. There was a massive amount, right, for APE. I was buying those days. And so I'm pretty sure I have, some credits in there, some IOUs. But every day there's a daily list of stocks that the participants submit. And if you were paying attention yesterday, I was saying there's over 4,000 participants that are in this program with the NSCC. And the purpose is to cover temporary shortfalls. That's very, very interesting wording. And I'm going to show you the document right now, but let's just go over this first. But it says the purpose is to cover temporary shortfalls. And I'm pretty sure, I think this is how they got APE off the threshold list, because you had 43 million FTDs, and that was on the 24th of August. And the T plus 35 day is what I'm more excited about because, like it says right here, it reduces FTRs, but it does not eliminate the FTD. So there's still brokers out there, right, that there's shareholders, there's buyers that have the credits right now, and then there's brokers that created these FTDs that, from my information, they have 35 days to find those shares, to cover those shares, to deliver those shares to the buyer, because after the T plus 2, right, they didn't have the shares. So then it became a bigger problem, and they have up to 35 days from that fail to deliver the shares, right, from what I'm reading. But it's a temporary fix. It does not eliminate the delivery obligation of participants with FTDs. It does not eliminate. So they are still on the hook for the the FTD. So even though we got off the threshold list, I'm okay with that. Because after doing this research, I'm paying attention to the T plus 35 dates, and my guess, not financial advice, don't go buy crazy amount of calls or whatever. And even though this doesn't have an options chain, you can buy it through AMC or whatever, but make your own financial decisions. I'm just giving you the facts so you can process this and make your own decisions. But I'm expecting some kind of move between, this is the T plus 35 day, right? So between 9:28 and 10:05, and I will give you my reasoning on that right now in a little bit. But the other thing we're going to go over and read is going to be called the buy-ins. So it's a process where the seller has FTDs and is forced to purchase and deliver stocks. Now, it's a hot potato system because they rotate who has the potato. And that's, why I have this here with the FTDs, because they create these FTDs, but they never really truly close all of them out because they can kind of just cover some and then keep it going. It'll keep going as a loop where they deliver some and then they create more. They deliver some and they create more. So buy-ins is only the first step of this because it's a process. And then the oldest fails are forced to buy stock first. It's like a FIFO system, I would say, or, where you cover the oldest positions first, and then the new ones, you have that 35-day cycle. But the buy-ins are rare. So I want to show you this first, and then I'm just going to go over to the document. And something that I forgot to point out yesterday, but I'll read it right now, was this little part right here. Most often the clients of participants with FTR positions, so that would be us, the clients of whoever you bought your broker, right? You bought the share from your broker. Whoever the clients of the participants with FTR positions are not aware they have been credited IOUs as opposed to an actual stock, because their stock holding account does not distinguish between the two. So we do not know, right, if official. That's why I don't have proof, but I think I'm holding an IOU or a couple IOUs or whatever, right? Critics of the NSCC claim that a potential danger of the system of marking to market. The stock borrow program, let's go over that real quick. A mechanism that the NSCC has in place to reduce the number of FTRs but does not reduce the FTDs is the stock borrow program. Under this program, participants are able to lend excess stock in their DTC accounts to the NSCC so that the NSCC, right, excess stock, can satisfy and deliver requirements not filled via normal deliveries. So allegedly, right, perhaps maybe they're working together, right? That's why we say that the hedge funds and the banks and all this, right, they have somewhat of a protection from, it looks like, the government side of it. But each day participants submit a list of stocks they own and that they would like to have participate in the stock borrow program. It attempts to satisfy these obligations by borrowing from participants in the stock borrow program. That's why this exists. That's why, in my opinion, we have proof of synthetic shares. This is all in print right here. Algorithm that takes into account the participants' average loans and clearing fees. Again, so algorithm. And then they have a marked to market value of the borrowed stock. And we go down. NSC is simply acting as a facilitator of lending between the participant failing to deliver and the participant lending their stock. So they're acting as a facilitator, the middleman. And this is how they make the program attractive, by paying a rebate, by working deals out. And that's why, that's how we see these shares that are being lent out by the institutions. Although the NSCC states that the purpose of the stock borrow program is to cover temporary shortfalls in the continuous net settlement, there is no time limit on how long the NSCC may borrow stock from its participants. No time limit. The use of the stock borrow program does not eliminate the delivery obligation of participants with FTDs, and I think that's where the T+35 comes in. The stock borrow program has been criticized for allowing naked short selling to persist, and now I understand that statement fully after reading through this. Let's go up. So the buying in is the process in which a seller that has failed to deliver stocks is forced to purchase and deliver stocks to the buyer. Buy-in position is given high priority to the allocation algorithm and determines which participants will receive shares on settlement day. And there's a lot more details, but I don't want to get you guys, overwhelmed. But it's just like the settlement process of it. And the high priority in the algorithm that allocates shares is likely to result in the buying position being filled without the FTD being resolved. When this occurs, the FTR is being passed the FTR is passed on to a participant with lower priority in the allocation algorithm. For example, a participant that has just bought the stock. All right, so they're trying to cover the old FTDs, and anybody that creates a new one, well, that's what the algorithm is for, to determine, the shares that need to be purchased, depending on the age of the FTD. So right here, age of their FTD positions, with the oldest FTD positions being first. The NSCC to buy in the remaining position. In such case, the NSCC would buy the shares from whatever market it chooses, deliver to the originator of the buy-in order, canceling out the bought-in FTRs, cancel the FTD corresponding to bought-in shares, and debit credit any difference between the cash collateral held by the NSCC and the purchase cost, including fees, to the money settlement accounts of the participants with the bought-in FTDs. Two aspects of this process that are often misunderstood. First, the buy-in notices do not necessarily force a participant with the FTD position to close out the position in buying stock, because it's just the first step. FTR and a high priority on the delivery algorithm makes it likely that they will receive their shares and the FTR position will be passed on to another participant. That's what I'm saying. That's like a hot potato. And it's because of netted settlement, that's their system, the continuous net settlement. Oldest fails that is forced to buy in the stock, the oldest ones. Now, this is why they are rare. This is giving you an example from 2009 that a total of 69,063 failed transactions of a market maker, right, in 1 year, only 86 were bought in. 86 out of 69,000. Doesn't even see, it's way more complicated. There's way more to it than we think. Firms are unwilling to earn a reputation for forcing delivery in the hope that other firms will be equally lenient towards them when they fail to deliver. So they're like, hey, I got your back, you got my back, right? Oh, I have these FTDs. This time I have them, but yeah, next time, you might have them. So, help me out. That's how I think they kind of play with that. And in order to maintain a short position, they must buy in the stock, deliver to the initial counterparty, and then naked short sell the stock again, together costing them the round trip transaction cost. Naked short selling is effectively the way of short selling difficult or impossible to borrow stocks. And that was the information I wanted to give you. Just a quick summary. You have the system set up, which is like DTCC, and the SEC is supposed to overlook them, and then they're the ones that handle the settlements and the transactions. And that's why I think they have the real numbers in house and their computer system. No, I don't have proof, but from my research, I think they're the ones who have the true facts, the true numbers for whatever's going on with AMC and APE. And then you look at why there's the stock borrow program. That's to keep the liquidity, because even though we have locked the float, a lot of them could be fake. They could be IOUs, because they're going to have this liquidity system, right? As far as the CNS and this stock borrow program, in order to always have the ability to keep the charts moving, right? Because when we lock the float, in our heads, we're like, they shouldn't be able to trade or do this. And you still have, these random days of high volume, and it's because of what's going on in the background. And as we have learned that, finally, the U.S. clearing and settlement system does not provide any significant disincentives for naked short selling, which is why I think, they continue to do it, and why we continue to stay in this loop. Real quick, I'm going to show you guys, let's check some of this stuff out. 2.9 million shares, supposedly at 16.5%. Yesterday, I wanted to show you guys what multilateral netting was in case I didn't. Here's a quick, screenshot if you want to look at that. And who the DTCC is. And then we have the final proof I want to show you here. So these are the FTDs. They are in red because it means there are higher FTDs. And that's where I got this data from, all right? So not to give you any dates, but this is most likely what I will be paying attention to, and this is when I expect to see those FTDs being delivered, because the stock borrow program, I think that's how they got it off the threshold list. So to me, it wasn't all about the threshold list, but I think that's around the time too, if it gets high enough, that we will get news of Adam Aaron potentially dropping more shares. But remember, if he does that, he gets to collect money to clear the AMC debt as well. So we're in a tough spot right now, but always make your own decisions, do your own DD, and happy Friday, right? I hope you have a great rest of your weekend, catch some football, watch some, drink some beers, some drinks, go out, relax. Right now, we're in it to win it. So I'm holding with y'all, and I'll catch you guys in the next video. Peace out.